What is going on, traders? Welcome back to the Traveling Trader. Let us get right into it. So today I wanted to talk about why our stocks down today. Obviously, we could see a rally towards the end of day, especially before the long weekend. We've seen that time and time again. But why are they down so far? And I'll go over the technical indicators that I've been really talking about for a few weeks now, but as the SPY is in this tight trading range here, what does this mean for the SPY? What does it have to do in order to see a breakout either to the upside or a retracement back down to support? I'll talk about some great stocks to buy now. What is on my stocks watch list? I'll go over some technical analysis on Beyond Meat, Moderna, as well as Chewy, among others. Talk about some of our options and short plays. Currently in a short on JD.com, which is up 4% today because JD fell 4%. We shorted this yesterday. If you followed yesterday's video, my AMC credit spreads will expire today worthless, as you see here, which means we get to keep this entire $500 amount. If you want access to the trade alerts where I send all of these trades, link is in the description. It'll cost you less than a cup of coffee a week, so go ahead and sign up. And then I'm going to talk about Bitcoin's price. What is Bitcoin doing today? Is it following the markets? Has it decoupled? We'll get into all of that. So let us get right into it. Why are stocks down today? If we take a look at the SPY, I was saying this yesterday, that we are at an inflection point, at a crossroads here, right? Because we have this resistance cluster where the 100 and the 200 MAs are right here. We have the 0.618 fib level here. And it looks like the SPY is now crossing back down into this channel. Anytime you see a channel like this is essentially where traders are comfortable accumulating or consolidating on the stock. And if the SPY falls back down here, it just means that traders were willing to sell or take profits at, up at these outlier levels when it popped above this rectangular channel. And now it is heading back down for more accumulation at this range that traders are comfortable trading in. And I was saying yesterday that it was more plausible that we get rejected at this level than climb up because there are just too many resistance factors here, and we are falling down today. And as you can see, I opened up a SPY put option that we are currently up 22% on. This is on the Webull account. Webull is now giving away 2 free stocks. It is a fee-free trading platform, so if you want 2 free stocks, sign up with the link below. But yeah, so I opened up a SPY $300 put, which is now up 23%. I will likely keep this open due to how the SPY chart looks. There's short-term support at around 291, 292, but if we retrace back down to the 21 EMA, that's at around 287, and even further down where there is confluence at the 0.5 fib level, there's confluence between that fib level as well as some support here. If we fall down to around 278, that put will be extremely lucrative. We could be up 40% or more on that put. Now, again, I don't think we will hit these pandemic lows here. I mean, anything's possible. We definitely could, but I just don't think we will based on what the Fed's actions are and the endless amounts of stimulus that it seems like the government is willing to do, as well as, there is definitely a hunger for stocks here, even among institutional and individual traders. And there are some companies who have a, major stake in online business or have shifted their business online that are just absolutely killing it right now. So it is a very weird time. It is not a, typical financial crisis here. So, I don't know that we hit these lows here. I do think it's plausible, very plausible, and potentially likely that we trade in this, that we fall back in this range and trade in this range. I mean, we could even fall back depending on how long this takes and whether the people that lost their jobs, whether a good number of them get their jobs back or not. We could even fall back to this range between 246 and 264 on the SPY. But I think that's getting ahead of ourselves a little bit. I'm not one of these guys that likes to argue with what the market is doing. I like to react accordingly so I can set up my portfolio. I don't really have any emotions one way or the other. I know a lot of people are pissed. Why is the market going up? I think a lot of that is because people missed buying the dip in anticipation of further dips. Like I said, we could go down, but all I'm concerned with is being prepared for any move that the market makes. All right, let us take a look at our checklist. So great stocks to buy now. What stocks can we buy right now? Well, if we take a look at one of my favorite stocks right now is Chewy. We bought Chewy on the dip after retrace to the 50 MA here, and it is currently up around 4% today. But Chewy is basically an online pet store that is already beating out earnings expectations. And this stock had IPO just mid last year, so almost the same time last year. It is forming a double bottom here on the 1 day. And initially I was looking for a swing to about $45 or $46. However, I could potentially hold this long term depending on how I feel about it and what else I'm holding. But Chewy is definitely a good addition to a portfolio, in my opinion, so long as it stays above this 50 moving average. If it ends up falling below, then I'll be looking at around the $33 range where the 100 moving average is and this support line is, in order to get back into Chewy for a discounted price. Another stock that I'm watching and potentially going to add to my portfolio today is Walmart. Now, this is a no-brainer here, but Walmart, anytime I see a blue chip stock like this fall to a significant moving average or significant support level, and it is at a discount, I'm definitely willing to add it to my long-term portfolio. Because when you look at these blue chips, they essentially look like stock indexes. It's really just a gradual uptrend, and this is Walmart's monthly chart since 1972, and you could see that it is really just one long uptrend, and the bumps in the road where there were stock market crashes, they just look like little blips. Plus, during crashes, Walmart actually performs relatively well. You could see on the monthly chart, again going back to 1972, it has never fallen below the 200-month moving average, which is the green on my chart. So looking to add Walmart here as it dipped a few days ago, and it is currently at close to the 50 moving average support. Beyond Meat is one that we swing traded after it popped above this resistance level. It is currently trading sideways in a continuation pattern. Hopefully we see a continuation upwards. If not, then I'll definitely be looking to pick up some Beyond Meat at a retracement to the 21 EMA, which is here, the white line on my chart, around $122, $123. I think in the mid to long term, Beyond Meat can easily be a $200 stock. It actually did cross $200 during the summer of last year, but based on its revenue and market share, I can easily see it trading normally at $200 and above. So good long-term addition, I think, but in the short term, I would wait for a retracement to at least the 21 EMA to pick it back up, especially as it looks overbought here on the RSI. Moderna is one that we shorted, but I exited the short a little bit too early, and it has since tanked to below $70. This seems to be the trend with the vaccine stocks where, every week or two there is a positive news cycle surrounding the company that's testing the vaccine, and then you see it peak and then retrace back down. The thing is, a vaccine is at least a year away, so this type of price action reflects that, where there's hype, but then people realize, or traders realize, that hey, a vaccine is actually, before we actually get results, a vaccine is a long time away. So then you tend to see the hype die down. And you could see this trend continue here, and you can continue to actually trade this trend where you see a peak and then it dies back down, another peak dies back down, another peak, so on and so forth. Currently not taking a position in Moderna, but another pharmaceutical company that I do have a position in is Gilead. After Gilead had retraced all the way down to the 100-day moving average, it did so back in March 16th. And it seems to like these retracements. You could see this looks like a heart rate monitor where, it finds peaks and then tries to find support at the moving averages. Usually it's the 50-day moving average. It has been on a couple of occasions, the 100-day moving average, which is the yellow on my chart. So this is a fairly low risk, high reward trade if we do see a spike from here. And you can essentially set your stop limit below the 100-day moving average to exit relatively unscathed. One more that I'll give you, and again, I send these all out in the trade alerts, is the UVXY. This is a volatility index. This is a little more risky than the others. Definitely not a long-term hold. But when you see the SPY trading in this, this tight sideways range here, and if you zoom in even, just even closer to the last week, you see how tight this range is here, bouncing between 292 and 297. Then you can expect a big volatility move soon. And that's why, getting into a volatility index like the UVXY, I mean, even if you look at what's been going on the UVXY in the last week, this is an extremely tight range that you don't typically see with a volatility index. So you can either buy it directly like a stock or trade it with options. And currently we have an option on the UVIXI, a $36 call spread, and it's currently trading at 36.22. So if we do see a spike in volatility, that option should be worth a lot more next week or the week after. All right, let's go back and take a look at this. Options and shorts. I already talked about most of this actually in the first segment, but basically I have a short on JD. We have the AMC options expiring today, going to keep that easy $500 here. I have an iron condor on Home Depot. This one is currently up 20% for us, and I could close it today for profit, but Home Depot looks like it's right dead in the middle of this range here, trading at around 239. So as long as Home Depot, stays between 228 and 251, I can collect a max premium on expiry. And this one expires June 5th, so 2 weeks from today. I also have a much wider iron condor. As you can see here, this is on Nvidia. This one's up about 10% today, but this one's looking good. The reason that I was comfortable opening up an iron condor on Nvidia is because if you look at Nvidia's price, and I talked about this yesterday, it had its earnings post trading day yesterday, but there was already a massive move up before earnings. And when you see that, and especially if earnings are expected to be beat, and they were beat on Nvidia yesterday, then that's likely priced in. So you don't really see a huge earnings move thereafter. Now, in a couple days it could move up slightly or move down, but you don't see these big spikes on earnings day for things that are expected and priced in. However, I didn't want to take the risk, and that's why the iron condor looks so wide here. But again, we are dead smack in the middle. And if this expires within the range of 322, and actually let me take a look at the price slices. If it expires in the range between 322 and 387, I get to keep 100% of the credit. Now, this one expires July 2nd, just giving me enough time to make adjustments because, Nvidia always has the capability of making huge moves. But just to give myself enough time, and I'll continue to monitor it. If I need to close it out early for profit, I will. If I need to make adjustments to either side of the legs, I'll do that as well. But for now, this is up about 10% for us, and I'll just keep it open as it will likely generate value every single day that it remains within this range. That's really the beauty of iron condors. All right, let us take a look at Bitcoin's price. So looking at Bitcoin's price, it looks like it has decoupled from the market, at least in the short term. And a way that you can look at this is if you pull up the correlation coefficient here. So let me pull it up on the indicators. So if you look at the correlation coefficient, you could see that during the crash, the Bitcoin crash, it coincided with the stock market crash, and we had a 0.9 correlation, which is almost a perfect correlation between the SPX and Bitcoin. However, these last couple of weeks, you could see that correlation has dropped. It has even fallen to 0 at times, and now it's just under 0.3. So not really correlated with the stock market. We saw a couple of big days in the stock market while, Bitcoin was either stagnant or we saw it drop. And today Bitcoin's up 1.5%, while the stock market is down 0.5%. Now, we have seen this before where, Bitcoin gets decoupled for a short amount of time and then returns to parity with the stock market. So we'll see. I mean, the halving is behind us. But the one thing that is disturbing with Bitcoin is the 10.4K resistance, which you see here in this dotted blue line. Every time we hit this 10.4K resistance, we get rejected more and more heavily each and every time. These long rounding bottoms here are making lower lows each and every time. So 10.4K for me is really the level that we have to get above to confirm any sort of long-term rally. And we have to stay above there for, a week or two just to ensure that Bitcoin is comfortable trading above 10.4K. In the short term, I did have a Bitcoin short that I closed out. Bitcoin is now above 9,200, trying to find some support above the 21 EMA, which it looks like it's currently stuck at. I did send out an alert that I was opening a long on Bitcoin. I just, I still have it open, but basically a limit at around 8,100 or 8,200, just in case it wicked back down to test this support cluster here where all three major moving averages reside. And that could still happen, especially on the weekend, especially on the long weekend when the markets are closed. During this rally, we've seen Bitcoin drop almost every single weekend. And even this big drop here was on a Saturday when Bitcoin fell by about 15%, but ended up closing the day at about 9% drop. So I'll still keep that open. I mean, there's nothing for me to lose by keeping that open. If we do wick down, hopefully it catches my long, and then, you know, we see a resurgence, especially because this pattern here, this is called an inverted Adam and Eve. But this is a bearish pattern. And typically you see a retest of the lows here and potentially a break past it if it is confirmed, right? So this right here, 8,500, is still a plausible area that Bitcoin can drop to. And if it's confirmed, we could see a retest of that 81, 8,200 level that I was talking about. And people ask me all the time, are you still bullish on Bitcoin? Well, it really depends on the time period that we're talking about. In the long term, yes, I do think we will get above the 20K level, even if it's just a blip. But I do think we'll make new highs eventually, whether that's 1 year or 2 years or 3 years, I don't know. But I do believe in trends. And if the trend continues, we will make a higher high than 20K. In the short term, this 10.4K resistance is brutal. So I do want it to break above there and stay above there for a week or two at least before I'm able to declare a new bullish rally on Bitcoin. Obviously, you know, coming from the depths of 3,700 here, this is an amazing rise that even the stock market hasn't done yet. So, you know, while I acknowledge this, the 10.4K still scares me. Anyway, that is it for this video. Go ahead and leave a thumbs up if you got anything out of this video. Subscribe to the channel, hit that notification bell, leave a comment in the comment section below. If you have a question, comment, let me know what you're trading. Are you in any of the trades that I mentioned? If you're having trouble trading options, I do one-on-one training. That same link is also in the description. If you want to sign up for June, because for May I'm maxed out, but if you want to sign up for June, hit me up on the Discord or leave it in the comment section below. Stay safe out there, traders. Peace.